Howdy folks, my name is Duncan. I'm an investor, soldier, entrepreneur, and trader, and I live in the great city of Atlanta, Georgia. I'm on a mission to create high quality stock market related content for everyone to enjoy. Follow me along on this journey as I'll show you how to buy and sell equities, trade options, and share my own personal brokerage accounts here on my YouTube channel, Striker Trading. Hey, how's it going, folks? This is Duncan with Striker Trading, and I want to thank you all for tuning in today. So today we got to talk about something that happened today that was absolute lunacy in today's markets. So today is Monday, January 25th, 2021, and we got to talk about Gamestop for a minute. So Gamestop, for those of you who don't know, trades under the exchanges under the ticker symbol GME and has done something over the last really few weeks that has kind of defied all logic itself. Gamestop is a brick and mortar resale company that sells video games, video game consoles, and a variety of other gaming accessories at their physical store locations around the US. Their stock has been in an unfortunate steady decline for the last 8 years or so, dating back to about 2013. It's been making lower lows and lower highs for the last few years, kind of confirming that general downtrend. Gamestop is a company that has been extremely popular in strip malls and other mall and shopping locations around the United States, as that's where most of their stores are located. That's where their physical stores are located, as opposed to being mostly standalone stores like you might see with other businesses. However, with the decline of retail shopping over the last several years, with the rise of Amazon and other online merchants and retailers that have been selling goods, coupled with consumers not traveling to malls because of the pandemic, GameStop has suffered quite a significant loss in its revenue over the last 10 years or so. In fact, they've actually had a significant string of negative quarters, which is not good, which has led to an obviously poor performance in the stock, at least until recently. So about 2 weeks ago, GameStop started trading at about $30 to $35 a share, which were not levels that it had traded at since all the way back to 2015, which is about 6 years ago. So this is about 2 times what it had been trading for back in December, and about 3 times what it had been trading a few months before that. And now it's up 10 times since its lows were during the March crash of last year, when the pandemic started. Between the 19th and the 22nd of January, GameStop started to slowly climb up even more than its previously recent high of $30, creeping all the way up to $45 on the morning of January 22nd, when things really just started to go off the rails. On January 22nd, with absolutely no change in the fundamentals of this company at all, GME started to rise from the fiery highs of $45, rocketing all the way to a new record high of almost $77 a share. This was complete and utter sanity, since the fundamentals of this company did not change at all. No new products or services were revealed, no change in company leadership, and no new announcements from the company at all. So, what caused this massive unexplained run-up? Well, it initially began when Chewy co-founder Ryan Cohen, no, not that Cohen, the other one. Yep, there we go. When that Ryan Cohen, took a $9 million stake in the company in late 2020, representing an almost $76 million investment into GameStop. Shares ripped up from the prior highs in the single digits and continued to trade in the high to mid-teens for the next several months, until when, the day before Inauguration Day, a renowned short seller that runs a website called Citron Research took a significant short position into GameStop and decided to tell the world. Well, what ensued next was an absolute onslaught of anti-short sellers hitting the market and taking a significant bullish position on a stock that is shorted out the tits.
Object to the tits!
Good.
This caused the stock price to more than double on January 25th. Shares were already trading all the way up to $136 in the pre-market hours, then dropping back down to double-digit numbers, temporarily finding support at about the $90 mark. Shares then soared all the way to GameStop's new all-time high of $159, where it peaked and traced its way back down to the $70 to $80 price range, forming my now new favorite chart pattern, the L. Oh, but wait, you thought the lunacy ended there? No, brother. This crazy train of unsustainable volatility continued well into the trading day on January 26th, and even to the hours of post-market trading, where GameStop again reached its all-time new high of $248 a share. This stock has now almost 30x'd in the last few months and has multiplied 3 times its own value just today. In fact, this stock is so unequivocally ridiculous that I wasn't actually able to trade or execute any credit spreads on GameStop at all today. the stock was so volatile, and it looks like traders were temporarily prohibited from trading certain option strategies on the stock. Now, I eventually got out of my own credit spread and netted about $840 on a 2-1E contract position. Now it seems as though we have entered into a new era of trading and investing, where unorganized groups of gamblers with some play money are beginning to turn the tables on experienced hedge funds managing hundreds of billions of dollars. Where will we see GameStop go in the future? Only time will tell. So, with all things being considered and everything being said, thank you so much for indulging yourself in this video today. I really do appreciate it. If you find yourself having a continued interest in following the content on this channel, please feel free to subscribe to Striker Trading so you won't miss any of my updates. You can also follow me on my personal social media accounts, including my Instagram, Twitter, and Facebook, all linked below. If you want to get 4 free stocks for your trading adventures, use the link down below to sign up with your own brokerage account on Webull, and you'll get 4 free stocks valued up to $1,600 when you deposit $100 into your Webull account. Also, if you want to earn $5 to start your Acorns account, follow the link below to create your own account on Acorns and have your money automatically invested for you every month. I love Acorns. I've been using it for well over a year, and I've gotten some very nice returns on my money invested through the app. So feel free to sign up using the link below, and I promise you will not regret it. I won't be plugging my Robinhood account since I don't want any free stocks to potentially be added to the portfolio, since I will not be adding in any additional funds to this account whatsoever. Write it down, take a picture, don't forget it. Again, thank you all for watching. I will see you on the next one. Deuces.